Next thing I would talk about is, basically the carnage that has been the hit to FICO, Fair
Ah,
Isaac, ticker FICO, FICO,
that's
from,
smoke.
yeah, Bill Pulte, the director of FHFA, Federal Financing Housing Association chairman. That FIFA is the overseer of Fannie Mae and Freddie Mac. He calls the shots. He makes the rules. It's a very powerful perch that he is in. And not only does he get to write the rules for Fannie and Freddie, but he gets to have tremendous sway over really the whole sort of mortgage market ecosystem. And that extends down to Fair Isaac, FICO, and to an extent the credit bureaus as well. And if you've been following this, if you haven't been following this, over the last several days, Bill Pulte has made a few comments at some industry conferences, and then a few comments on Twitter or on X, basically really calling out FICO specifically, and really casting a lot of doubt and a long shadow over their pricing increases over the last couple of years. And the problem here is this. So FICO trades at a extraordinarily high multiple on any sort of conventional valuation measure. And the problem is not that it's at a high multiple, but that in order to achieve the earnings growth that multiple represents from what it expects, they need to be able to raise pricing significantly for years and years into the future. And so the fact that Bill Pulte is calling them out on these prices explicitly and frankly repeatedly now over the last several days is a huge problem. And so I guess not surprisingly, the stock is down about 31% in 5 trading days, which is pretty remarkable. FICO is an amazing business. It's a monopoly, I guess soon to be a duopoly, but still basically a monopoly. When you're a monopoly, the last thing you want is attention. You never want people to be looking at your business. You never want people thinking you're a monopoly. That is a recipe for disaster. Read Peter Thiel's book 0 to 1 on this. He does a great job of explaining why that's the case. And so FICO's in a terrible position here. They are a monopoly. They don't want anybody to know they're a monopoly because it obviously makes it very difficult for them to raise price. So anyway, the latest salvo here was a tweet yesterday from Pulte, basically retweeting, some guy from the mortgage industry who has like 100 followers, calling out FICO's pricing increases. And it's sort of weird because what he's calling out isn't even really what's going on with FICO. It's a pretty significant, kind of misconstruing of reality. Nevertheless, that doesn't matter. Pulte said, still not happy with FICO. We should be making some decisions on all related items in the next 1 to 3 weeks. So obviously, tremendous event risk here looming over the next few weeks for FICO. One thing I would say is that fundamentally, the fact that the 10-year and 30-year Treasury yields are bullish trend is a huge problem. About 40 to 45% of FICO's business is in the mortgage market. So if you've got mortgage rates trending higher, i.e. Duration in the Treasury market trending higher, that's not good for them. And the stock performs really poorly in only one environment from a backtest standpoint, and that's quad 3. We've got a quad 3 expected for the full quarter, Q3. I would say on a monthly basis, we've got a June quad 2 and a July quad 4. So that could be interesting here as we transition out of May in a few days.
Thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.